weeks already pronounced move, 118 or so on the 10-year. Can that go on?
I think it could go on a little bit longer. I think it shows what a great hedge asset those treasuries are. I mean, look what happened to VIX today, up over 30%. People love those assets that move opposite the risk assets, move opposite the stock market. The VIX and the treasuries now have been it. So people just sort of say, I'm going to go into treasuries whenever, market falls. Listen, the Delta variant is more threatening internationally, clearly, and in emerging markets, which are not well vaccinated at all. But even in European markets where AstraZeneca doesn't seem to be as effective as the mRNA vaccines in the US, this Delta variant is probably going to cause the last wave in the US. When it's over, maybe a month, 6 weeks, 8 weeks, I think the US will probably have achieved what we call herd immunity going into the fall. So I don't see US economic growth slowing. I do see an effect on world economic growth because they don't have, they're not approaching the herd immunity. I think that the US is pretty close to now.
So that's sort of suggestive, Professor Siegel, that this is the final flush out for equities. Yeah. I mean, maybe not if you're saying 4 to 8 weeks, there could be more downside. But do you feel that that's what's happening in the markets today?
Yeah, I mean, I still think the bull market's not over. I mean, we may have a few more percent to go. But again, as Meg Terrell said, it's infecting people. We have treatments even for the unvaccinated, and I hope this does encourage more people to get vaccinated. But for the unvaccinated, we have more treatments that have lowered the death rate. This is likely to be the last U.S. wave, and the market will see it way before it actually peaks in the data. We may have a few more percent to go, but I think with the accommodative monetary policy of the Fed, I don't think tapering's off the table because I think the inflation news is not going to be good in the next 2-3 months. But nonetheless, with all that money out there, all that support back there, if we don't get an infrastructure bill, we're going to get a bill by the end of the year that's going to increase spending again. And I think that the push there still is favorable for equities.
So would you go so far, Professor Siegel, as to say buy the cyclical stocks and the reopening plays, which have been beaten down the hardest, the airlines, which are in a bear market, the autos, energy, all of those groups that are tied to a recovery story?
I think what you saw, pretty much as Mark Santoli said, the beginning of the year when everyone was getting the vaccines, we thought, hey, yeah, this is reopening. And that got spent, and then Delta hit. I mean, I personally know people have now canceled their trips, delaying them again. So I hope it gets together. Delta, that kills energy. I mean, that is definitely a reopening trade, a value trade. Interest rates go down, that hits the financials. Another value stock gets hit. So, I mean, and of course the cruise lines. But I think that there's opportunities in those areas right now. And I think that once people see this is the last wave and we will effectively go back to normal by the late fall, I think that those might be good purchases for the next 6 months.
To what extent, Professor Siegel, when having said that you think we're still in this bull market, does it worry you the idea of the mega cap growth tech stocks, which are so important to the overall indices, if they were to show signs of rolling over, would that concern you?
Well, Jim Cramer this morning said that's the last one to roll over. That means the correction is over. He actually regarded that as a bullish sign. Now, I don't know whether that's going to happen. People have flocked to the FANG. FANG's not considered that risky growth anymore. It's almost considered